For the next hour, you'll be leaving the Show Me state and entering the Show Me the Money state. So stop what you're doing, grab a pen, and get ready to learn. Jake Floyd of Floyd Financial Group will be your guide for straight talk and honest answers about living the life you deserve in retirement. So prepare to be empowered. Now, here are your Show Me the Money hosts, Jake Floyd and Jeff Shade.
Good morning. Thank you so much. Welcome to Show Me the Money with Randy and Jake Floyd, the radio show that gives you the straight talk and honest answers you need to help you reach your wealth management and retirement goals through smart investing and careful planning. My name is Jeff Shade, and I'm just here to ask the questions. But of course, the words of wisdom and solid advice, they come from Jake Floyd of Floyd Financial Group this morning. Hey, Jake, how you doing?
You know, Jeff, I'm feeling a little more hopeful this week than I felt in a while. Thank you for asking.
Well, I'm going to find out why you're feeling hopeful, but before that, I want to thank everybody who joins us here each and every Saturday morning on KSGF for our little get-together. We have a lot of fun on the radio program, but we also have some very good information, so I don't want it to slip by that you feel hopeful. So, Jake, what is giving you so much hope on this Saturday morning?
Yeah, so, last week we heard, and I haven't had a chance to talk to people since then, obviously, on the show. That interview with Elon and Trump, it showed us how long it's been since we've had uncensored conversations around politics in this country. Because if anybody was listening to that, I think you have to really take a step back and go, wow, this is different. And it shouldn't be different, right? It should be part of the process to hear a candidate and a business leader, a billionaire, right? They should be able to speak
right
without being censored and without being shushed by all the media out there. And I think we saw potentially the way forward, because prior to that interview, I really think that if you're being honest with yourself and you look at all the legacy media out there, it felt kind of hopeless. It's like, how do you beat this machine that is constantly not allowing free speech to take place, not allowing ideas that they disagree with to come out? And so I think with billions of interactions later with that content and something like tens of millions of actual views, I think we're seeing that people are starved for that uncensored take.
I would have to agree with you, Jake, that this really was a breath of fresh air. We're going to be talking about that a little bit more in our next segment, but for right now, let's talk about current events, and then, of course, we'll talk about the interview just a little bit later on. I understand the PPI came in a little light, Producer's Price Index. What does that mean for us?
Yeah, so the PPI, like you said, Producer Price Index, that number is a very important number because it's the input cost of all the things that you buy. And so if we're going to tame inflation, right, we have to start with the cost of all the goods being produced. And so that number coming in a little bit light, kind of Goldilocks, while it is welcome, it is also not unexpected. And the reason for that is this current administration has been cooking the books for quite a long time. Mm-hmm. And what they do inevitably is they say, hey, we're going to make PPI whatever we want it to be. And then over the next 2 months, we're going to go back and alter it back to what maybe it actually is. And so they say, oh, a month later, we'll revise it back down or revise it up or whatever the number is. But I do think it is setting the stage for a potentially maybe even 50 basis point rate cut.
Wow.
In the future. And I think that's one of the things we're going to talk about too is interest rates in general. There's a tool out there called the Fed Watch, and CME, which operates futures data and that kind of thing. They have compiled this data and they come up with a probability tool of how likely is it that the Fed is to cut. If they do cut, how much are they going to cut? And so right now, it's pricing in a 53.5% chance of a 50 basis point rate cut and a 46.5% chance of a 25 basis point rate cut, and a 0% chance of staying the same. Some of the listeners may be surprised by that because he hasn't really signaled yet that he's going to cut. And while these numbers do not mean anything inherently, they have been right 100% of the time. The most likely scenario has played out for the last 24 months with the Fed. And so while they could deviate from that, I think whatever the most likely number is likely what we're going to get out of the Fed. And so we may get a 50 basis point rate cut, which will breathe new life into the economy. It'll bring interest rates down. Some of this is going to be in anticipation of a potential Donald Trump presidency. And without going too far down that rabbit hole, that will fix the inflation problem for the foreseeable future because we'll drill for oil and prices will come down. All that to be said, I do think it's very likely. I think probably 2 or 3 months ago I said on air, I said I'm predicting it now, a September rate cut. So I'm going to take my little victory lap here, just a little one. But
Okay.
I do think it's very likely that we're going to get our first rate cut on the 18th of September. And then from there, we'll just kind of have to see how things go. But right now, the market is pricing in another 2 cuts in addition to the 50 basis points, so a full percentage point cut by December 18th, which is pretty significant. That's quite a bit of cuts.
Yeah, and a couple of weeks ago, they were calling for emergency rate cuts. Jeremy Siegel of Wharton called for 275 basis point cuts. We knew that they weren't going to happen. Now you're saying there's a better than 50% chance of a 50 basis point cut. Are we seeing this happen in September, as you said, or could it be pushed off further?
So I think the 50 basis points, it'll either be 25 or 50. There's some more data that's going to have to come out before that we can really be sure, but that first 50 basis points is likely to come in September and then maybe followed by 25 in November and 25 in December. However, as most of the people listening to this right now are probably aware, we're about to have the most highly contested election in history.
Oh, yeah.
And so the September 18th is the next rate cut, but then the one after that is on November the 7th.
Yeah.
Okay. So on November the 7th, I would be willing to bet a significant sum of money that we will not know who the president is yet.
We're still not going to know. It's going to be that
November
highly
the 5th is the election.
Right.
And so we're
2
going
days
to have
later.
people crying foul. We may know who, quote unquote, won the election, right?
Right.
But it will not be without being contested, right? And so I think while all those proceedings are going on, the market is probably not going to like that very much. And so who knows what kind of rate cuts we may get out of the Fed during that time of turmoil. All that being said, I do think that any big sell-offs during that period are likely buying opportunities in the market. I don't want to give blanket advice to people here, but that's something we talk a lot about in our one-on-one meetings.
And I would bet with you, Jake, but unfortunately I'm on the same side you are, so we got to find somebody to bet with. Yeah, November the 7th, we're still going to be trying to sort all of this out. You talked about these 50-point basis cuts. What is going to be the net result for our listeners when we do get these rate cuts?
Yeah, so when the Fed really cuts rates, it makes it easier for business to do business. If they need to borrow money for whatever reason, that money costs less. Interest rates in general come down. Mortgage interest rates come down. So if interest rates come down on mortgages, then people can refinance, tap the piggy bank, pay off the credit cards, go buy a new house, go buy a bigger house. Interest rates coming down is good for asset prices. We have to be careful with it so that we don't reignite inflation. But interest rates coming down in general is good for the economy, good for asset prices. So people that have money invested are going to be making money 99 times out of 100 when interest rates come down.
All right, so it's certainly going to affect the housing market. Interest rates are over 8%. I'm seeing in them around 6.4%. Are we expecting that possibly these interest rates could be even going down further as far as mortgage rates go?
Yeah, Jeff, I think that especially once they really start cutting, I think it's likely we'll see 5% mortgage rates in the not too distant future, maybe the next 6 months. A year from now, it could be significantly less than that. Some of that's going to depend on who gets elected,
Right.
how quickly that someone may or may not run the economy into the ground, and all that kind of thing. I think interest rates will come all the way back down. I think we may even see 4% interest rates again on mortgages. We'll have to see, but if I were going to predict, I would say we'll see slightly under 4% 30-year mortgages in the next 18 months. I think a lot of the reason for that is if one person gets elected, they're going to run the economy into the ground. If the other person gets elected, we're going to defeat inflation by drilling for oil. And either way, interest rates are likely to come down under those scenarios. And so, I think that Donald Trump will want them to come down so that we can also refinance our debt at a rate less than 5%, because we were paying like 1% on that debt. Now we're paying 4 and 5%. So I think that it's a pretty safe bet to think that they're coming down, which also kind of leads into our third segment today, which is talking about bonds. Right. Bonds are kind of looking attractive for the first time in 15 years or so, and we'll get to that when we get there. But, in any environment, there are things to lean in and out of, and so we'll talk about those a little bit later.
And Jake, the Olympics just ended, so let's end this topic here on sort of a light subject. I understand the U.S. really did quite well when it comes to gold medals this year.
Yep, they pretty much mopped up over there. So total medals, 126 medals, 40 golds. We tied China with 40 golds, but China's total medals were quite a bit less at 91. So it's good to see that part of America at least still being America. That being said, there was a lot of very interesting things going on at the Olympics and the opening and closing ceremonies. And, I personally did not watch much of the Olympics. I did see some of the highlights. It's another one of those places in society that I don't like, because it's not the athlete's fault that the powers that be insist on politicizing and bringing up all these social issues at every turn, at every possible chance they can jab at Christianity, they do so. That's not the athlete's fault, and the athletes suffered somewhat in viewership because there were people like me that decided to not watch a lot of it because I didn't feel good about promoting what they were promoting. And so I do think the Olympics are a good thing. I just think we should get back to competing and stop trying to make statements about trying to push political agendas through Paris and all this kind of thing. So, but yeah, I mean, it was good to see, the U.S. come out on top there, and U.S. stay dominant in a lot of the sports that they're dominant in. And Simone Biles kind of mopped up and, got a bunch more gold around her neck. And so, again, that was to be expected, but still good to see the U.S. be dominant.
Right, and then the spotlight shined in the roof. Tom Cruise came down, grabbed the Olympic flag, jumped on his motorcycle. I don't know how he rode his motorcycle across the ocean, but he ended up in Los Angeles, I understand, and he planted it there. So 2028 Olympics come back to the United States. It'll be in Los Angeles, and I will be nowhere near that city when that happens. We're talking with Jake Floyd at Floyd Financial Group. There's enough traffic there. I lived there for 20 years. I can't imagine what it's going to be like when the Olympics come. But anyway, we're talking with Jake Floyd at Floyd Financial Group. Glad you could join us here on this Saturday morning. If you'd like to get in and sit down with Jake, have a casual conversation about your journey towards hopefully a confident retirement, we're offering it this weekend for you to do just that. Call 417-889-7233. 417-889-7233. Request your no-cost, no obligation, no judgment retirement plan with Randy and Jake Floyd at Floyd Financial Group. You can make that call right now at 417-889-7233. Leave your name, telephone number. Ashley will call you back during the week and set up that conversation. No cost, no obligation, no judgment. Take advantage of it right now. 417-889-7233. You can also find out more about us online at floydfinancialgroup.com. Jake, we're going to take a break. When we come back, we'll talk more about this interview that Elon Musk had with Donald Trump on X when Show Me the Money continues right here on 104.1 FM KSGF, where Springfield comes to talk.
Ready for another helping of some more real money talk? Thought so. Now, here's another serving of Show Me the Money with your hosts, Jake Floyd and Jeff Shea.
Welcome back to Show Me the Money. I'm Jake Floyd. In this segment, we're going to be discussing the interview with Elon and Trump and how that really is going to affect things. I think a lot of people don't understand how big a deal that really was.
Yeah, and as you said, this was an enlightening interview because it was one of the first times that we've really seen a politician speaking in an unfiltered manner like this. So I know that you got to see pretty much a lot of the interview. I know it was more than 2 hours long, but Elon Musk is he says he's a moderate Democrat. How did this interview go, a moderate Democrat talking to Donald Trump?
Yeah, so I think the first thing that we want to talk about is, when the event was actually supposed to start, right? The problem with this type of forum is you have so much opposition. There's so many people that don't want Elon or Donald Trump to be able to say the things that they need to say or want to say. As we know, they tried to shoot him, right, to stop him from talking. And so this is no different. Because it was supposed to start at 7 o'clock our time, about 5 minutes before, there was a massive DDoS attack, which is distributed denial of service. And so it's basically what happens is they start a hack on the system by flooding it with fake users.
Huh.
And so it's like there's, the whole world at the same time is trying to log into Twitter to watch this. And so because everybody's trying to come in at once, people that actually want to get in can't get in. This went on for about 30 minutes, and they were trying to fix the DDoS attack, and they kind of got around it enough to where they ended up getting I think the highest concurrent number was about 1.3 million people that were able to log in. But a lot of people gave up after 30 minutes, and so it started about 30 minutes late. That alone right there just shows you, that people are really okay with censorship. People are okay with denying people their right to free speech. I mean, if you go out and you put into Google, why censorship, it'll try to autofill with why censorship is a good thing, why censorship is necessary, why censorship is good in school. And I think that should be very disturbing to us. Anyway, I wanted to get off my high horse here, but I think that's a very important thing to understand is that there's so many people that do not want to hear Donald Trump speak, do not want to hear Elon speak, and more importantly, do not want to let anybody else hear them speak. Don't listen if you don't want to listen, but don't try to control everything. Anyway, so after they fix this whole problem, right, they go live. They ended up talking about Trump and his assassination attempt for probably 20 minutes, which was a little bit dry for those who've heard the story many times.
Right.
But I think some people may not have heard the story, so I think it was still necessary to go through. And then they started getting into some of the policy issues. So there's a couple things that struck me about that. Elon several times was to the right of Trump on a lot of these issues.
Interesting.
In fact, there was one time that he was talking about spending in this country and exactly how much money is being spent. And he said, we need some accountability for this. He said, we need to have a committee, which, there is a committee in Congress that's supposed to be watching over the spending. But he's like, we need to have true accountability for all the government dollars being spent to make sure that the hard-earned taxpayer dollars are getting spent on things that actually matter. Which sounds like something Rand Paul would say, not Elon Musk, right? And I think that was very eye-opening for me that Elon and Trump agreed on probably 95% of the issues. As was to be expected on the electric vehicle front, there was a little bit of, they agreed to disagree a little bit. Trump complimented Elon on his ventures and his Cybertruck, which, there was a streamer recently that gave a Cybertruck to Trump. And so he got a chance to get in there and look at it and drive it and all that kind of thing. So, he complimented Elon on that. But he basically said global warming is kind of a hoax. Elon kind of came back and said, global warming is not a hoax. However, it is not, we're not all going to be dead in 4 or 5 years. He said 4 or 5, 600 years from now, we might have a problem if we don't make some changes. So it's not ultra urgent. But if we can just lean into that direction a little bit, we're going to be fine. And so that was probably the only place where they really disagreed. But there were so many issues on the border, on immigration, on taxes, where they really agreed on a lot of things. Elon thinks he's a moderate Democrat, although most of what I heard on the show there was not that way at all. If you're listening to this and you have not watched it, I think you owe it to yourself to go listen to that. So I say watch. It's not watchable. It's just audio, but it's about an hour and 40 minutes long, which sounds like a long time. I don't think they planned to go anywhere near that long, but the chemistry was good and they were talking about all kinds of important things. So they just kept going till almost 10 o'clock at night. I think the most striking thing about listening to it is you realize how long it's been since you've heard an uncensored conversation between a politician and an interviewer. Because it's so strange listening to him ask questions and allowing him to say whatever he wants to say. He's also asking questions that don't even get asked on legacy media because they don't want the answers to those questions being broadcast. It was a very good thing, I think, for democracy and for our way of life. Even if you're not a big Elon fan or even a big Trump fan, I think you still owe it to yourself to listen to what is likely going to be the future of uncensored media in this country.
Because this was really sort of a freer conversation, Jake, do you think that people who maybe didn't have the best opinion of Trump on a personal level or politically saw a different side of him? I mean, did what he was talking about, did it make a lot of sense regardless of which side of the fence that you're on, do you think?
I think so. But I've thought that for a long time, I guess. So as you're listening to it, there's a lot of topics that he covers that I think are kind of no-brainers. He said, hey, we should have legal immigration, not illegal immigration. We should have law enforcement uphold the law. We should, try to keep taxes as low as possible and hold the government accountable for spending. I don't think those are divisive issues.
No, not at all.
I mean, I don't know. Maybe somebody thinks they are, but I don't think they're divisive at all. I mean, that's just common sense. I don't think you have to be a Trump fan to agree with a lot of what was said, both on Elon's side and on Trump's side. But again, it was a first in a lot of ways. And again, if you haven't listened to it, I think you should. When you're in the car next time or whatever, just turn it on and listen a little bit. If you want, even if you've heard the story a million times, like I have, fast forward the first 15, 20 minutes where they go through the assassination attempt and all that and get to the issues. But I think what you'll find is that we're closer together than the media would have you believe. The media is constantly trying to drive a wedge between us, between the left and the right. And I think that people that are not just way off the deep end left, most of them would agree with a lot of things that were said if they would allow themselves to listen. Right, and if the media would allow them to listen.
Yeah, and what I find interesting is, as you said, illegal immigration versus legal immigration. I don't understand anybody who would be for illegal immigration, somebody who would be for handcuffing the police, but we're seeing that now and again. So this is an interesting platform that Donald Trump could take along with Elon Musk, and I don't think this has really ever happened. Ever, has it? I mean, this was kind of a historical event.
It also shows you the level of control that CNN, Fox News, MSNBC, ABC News have had over this situation for decades. And I think that's one of the most striking things about listening to it is you're like, why have I not heard an interview like this before? And you have to go up the food chain and go, it's because they don't want you to hear an interview like this. Despite their best efforts of hacking the system and trying to flood the base with, usership and all that, trying to keep people from hearing it, it still got out. It still happened. And I think that the amount of interaction around it has been just staggering. Even if people didn't watch it, they're still talking about it. And people that did watch it are talking about it, and there's interaction around that, in the billions of interactions. This is why I said at the top of the show that I'm a little more hopeful than I was before, because I really think that we're going to see a time where we may get back the ability to listen to the raw candidate, regardless of who that candidate is. I think any smart candidate is going to want to have a forum like this where they can speak directly to people without being censored, without being directed by some legacy media person to go whichever direction they want, right? They can say exactly what they want to say and what they want the people to know.
Jake, was there anything about this interview that surprised you?
The fact that Elon is so conservative on some of the issues really surprised me, because Elon, has been a longtime Democrat, although Trump was a longtime Democrat prior to 2014 and deciding to run as a Republican. I think that shows that the vast majority of people that are on the left and right are not really that far apart, right? There's the polar opposite ends that are constantly at each other's throat. But a lot of the people in the middle are not that far apart. And I think that what Elon wants to be is he wants to be compassionate and empathetic toward people.
Right.
But at one point during the conversation, he said, we also have to have empathy, not only for the criminals, right? He was talking about the justice system and that kind of thing. You want to have empathy for the criminals to some extent, but you really need to have empathy toward the victims, right? Mm-hmm. And the fact that if you don't incarcerate these criminals, they're going to continue hurting people. And what about the victims? I thought that was a very, clear way to say it. I think a lot of people would resonate with that listening to the show, that if you commit crimes against other people, you forfeit some of your freedom. I mean, that's just kind of how it works. And the left is trying to make that not a reality. And that's why we have so much lawlessness in this country. And so I really think that almost anybody could listen to that. And if they allow themselves to not be offended, would not be offended.
Right. And I think you really have to go into something like that with a really open mind, put any kind of prejudgments aside, and listen to the facts. It's on X right now, or it's in a lot of different places too. Again, no video, it's just audio. So as Jake said, fast forward through the first 20, 25 minutes if you already know about the shooting. It's going to be a little more than an hour of a very powerful conversation. For those people who didn't hear the first part of the show, Jake, I want you to repeat this. You are predicting that on November the 7th, 2 days after the election, that we're still not going to know who the president is, or it's not going to be proven who the president is.
Yeah, obviously, I can't be sure of anything, but I would say that I would estimate the chance at about 90% that we will not know midday on the 7th for sure who's going to take the presidency. I really think that there's going to be a lot of engineering of this election. We'll call it that. Cheating might be another word for it, but we can assume that that's going to take place. We can assume that whoever wins, quote unquote, the other is going to contest it, right? Mm-hmm. And so I'm not saying we won't have election results by then, but they will be the first election results, right? That not the recount results, not the adjusted for cheating results, not in front of the Supreme Court talking about, whether or not it's lawful to recount and how to recount. And I think there will be thousands of videos of cheating on the election, because I think everybody's going to have their phone out this time. How many episodes of cheating is necessary before we can conclude that the election's stolen, right? This last time, I've seen probably 10 or 12 really good, solid pieces of evidence of cheating. However, they were, maybe a few thousand ballots at a time. Mm. Is that enough to constitute a stolen election? I don't know. I mean, I have my thoughts about it, right? But I think that's why it didn't make its way through the court system. If we have thousands and thousands and thousands of videos of people cheating, things will have to change in this country. Right. And the left is not going to like that. Right? The idea that you're going to have to show up on voting day with an ID is going to really burn them. I think there's going to be a big fight over it. We'll see what happens. I hope I'm wrong. I hope it's smooth and goes well, but I think there's a very good chance that we may not know midday on the 7th.
Well, these are very interesting times, Jake. This has been a very good conversation. And, of course, for people who have just tuned in to us, you're listening to Show Me the Money with Jake Floyd. My name is Jeff Shade. If you've missed any part of our conversation, remember, we're also a podcast. Go to wherever you get your podcast, search for Show Me the Money with Jake Floyd and myself. You'll find this show and many of our past shows so you can stay on top of your journey towards a confident retirement. And, again, this interview between Elon Musk and Donald Trump is on X currently. It'll take you a little more than an hour to digest that, audio only, but it'll be well worth it. And once again, for our listeners, 417-889-7233 is our telephone number. If you would like to come in and sit down and talk to Jake, maybe you want to talk about this, but most importantly, you probably want to talk about your journey towards a confident retirement. No questions off limits. It's entirely complimentary, no cost, no obligation, no judgment whatsoever. 417-889-7233. Make that call this weekend. Leave your name, telephone number. Ashley will call you back during the week and set up a time that's convenient for you and the advisors here, Jake and Randy at Floyd Financial Group, 417-889-7233. You can also find out more about us online at floydfinancialgroup.com. Jake, time for a break. When we come back here on Show Me the Money, we'll be talking about how to decide between Treasury, corporate, municipal bonds, and more when Show Me the Money continues on 104.1 FM KSGF, where Springfield comes to talk.
Ready to climb a mountain of financial know-how? Good, because it's time for more Show Me the Money with your financial Sherpa, Jake Floyd.
Welcome back to Show Me the Money. In this segment, we're going to be talking about how to decide between treasury bonds, corporate bonds, or municipal bonds.
And Jake, there's been quite a buzz surrounding bonds recently. Brokerage accounts or platforms like Webull Public have made it easier for investors to buy their own debt securities. Bonds, of course, one of those things. So let's talk about basically the three different types of bonds here: treasury, corporate, and municipal bonds. So let's start with treasury bonds, how they differ from corporate and then municipal bonds.
Sure. So treasury bonds are issued by the government. And there's T-bills and T-bonds, and that's more of a length issue than it is a difference in as far as the term. And then you have corporate bonds, which are issued by companies. So that's the debt of companies instead of the government, like treasuries. Municipal bonds are municipalities, so like cities and counties and that kind of thing. Municipal bonds are federally exempt on taxes. And so a lot of people really like to buy municipal bonds because any interest that those kick off is exempt at the federal level. If you own a municipal bond from your state, it's also state tax exempt in the state of Missouri if you have a Missouri bond. While that sounds great on the surface, there's a lot of things to consider there.
If an investor's thinking about buying a bond, why would they want a bond? I mean, what are we solving for when we buy bonds generally?
Yeah, so when you're buying bonds, bonds are generally a way to keep your money safer than like investing in the stock market. They can be used to diversify a portfolio that does have stock assets, because bonds and stocks on an intraday basis tend to move in opposite directions, meaning if the stock market's going down, people flee to bonds, driving the price up. Now, that has changed some over, that's the conventional wisdom of the last 100 years, but that has changed some with quantitative easing and the way things work with treasuries because of the distortions of all the money printing. But generally speaking, on an intraday basis, that still holds water. And so buying bonds, you're buying the debt of a company or a municipality or the government or a foreign government potentially. And so you just need to understand the risks associated with that. What's the likelihood that a country could default on its debt? Well, that depends on the country, right? And so the United States, I am not particularly worried about defaulting on its debt, at least at this point. However, if I had like Venezuela or Brazil bonds, that's a whole different ballgame. The same goes for corporations. They owe money. Are they going to make the payments? Are they going to pay the money back? And so that's going to vary a little bit corporation to corporation. Somebody like Apple, who has, a couple $100 billion on hand, is probably more likely to pay back their debts than a company who doesn't have a lot of cash on hand that's struggling. And so these are all factors that you need to consider when you're looking at buying bonds.
Okay, so we've got Treasury, we've got corporate, and we have municipal bonds. Now, are these rated in terms of their credit quality?
Yeah, so treasuries, especially U.S. treasuries, are generally rated the highest rating you can have out there, so they're AAA. And so you have, the idea is that the chance of you losing your money is almost non-existent because the government can simply tax their way into paying those bonds out, right? Or they can print money to pay it out. So you're basically banking on the government, whichever government. If it's the U.S., then that's one thing. But if it's, whichever government you are buying the treasuries from, you're banking on that government being able to make those payments back. Treasuries are a little more interest rate sensitive than municipal bonds or corporate bonds, meaning if you think that interest rates are going down, buying treasuries can be a potentially good investment because not only will you get the interest payment, but as interest rates decline, treasuries tend to be the most interest rate sensitive of the group, and they will appreciate as well as paying that dividend, so they become worth more if you want to sell them before the end of the term.
And when you're considering bond investments, an investor can go after higher yields by looking at bonds with lower credit ratings or even those without credit ratings. I think these are called junk bonds, but are junk bonds really junk or garbage?
So junk bonds are not inherently junk, although, in certain environments they can be. If you have an environment where you're having a recession, junk bonds may not be where you want to hang out because there will be companies that go out of business and you will have companies that are unable to meet their obligations. So that's a risk that you just need to make sure you're comfortable with. A lot of times when we're looking at junk bonds, what we're considering is what is the premium that we're getting on those junk bonds, meaning I'm taking extra risk by buying these bonds. But what am I actually getting for it? Am I getting an extra 2% interest? Am I getting an extra 6% interest? How big is the spread between a normal A-rated bond and something that's, C-rated? You want to make sure that you're getting rewarded for whatever risk that you're taking. And so certain environments, those spreads can blow out wider or become narrower. And that's one of the things you got to keep your finger on.
Now, with different types of bonds, as we said, there are basically three types we're talking about here, Treasury, corporate, and municipal bonds. Do they have different sets of tax implications?
So treasuries and corporate bonds are just taxable in a normal environment. When it comes to municipal bonds, like I said, muni bonds are federally tax exempt no matter where they are in the United States. But if you have a Missouri-based municipal bond, it's also state tax exempt. So a lot of people are like, well, that's a no-brainer. I want the one that is tax exempt. And it's not quite that simple because by and large, in most environments, municipal bonds also pay less interest than a comparable treasury or corporate bond because it's tax exempt. Usually, you only really want to look at munis if you're a higher earner. If you're in the 22% plus bracket on the federal tax bracket, maybe you should consider it. If you're in the 30 plus percent, 32, 34 bracket, then it really starts to make sense to buy municipal bonds. It can make sense lower than that, but it's kind of a case-by-case basis because you'll be earning less interest. In most cases, we don't want to just, if you're not paying very much in taxes, it doesn't make sense to try to save taxes where you're already not paying any.
Jake, earlier we talked about possible interest rate cuts. How do they affect bonds? Could they make them even more attractive, do you think?
Bonds are at their most attractive while interest rates are high and getting ready to go down. Kind of sounds familiar, right?
Right.
So I think it's very likely that interest rates are coming down, and interest rates are still fairly high right now. So bonds are kind of, in my opinion, in their most attractive position in the last 15 to 20 years, because we've gone through a really long dry period with bonds. In fact, the cumulative bond return of the total bond market, if you just bought some of all the bonds out there weighted by how much there are, you'd be up like 22% over the last 10 years total, not per year. And so, you'd have 1.6% compound interest or something over the last 10 years, which is awful, especially considering how much risk you took to do it. And so now that that's happened, though, anytime you have an asset class really tanking, on the other side of that is usually a pretty good opportunity. So commercial real estate is kind of in this boat too with bonds, but it's really one of the more attractive environments we've seen for bonds in a long time. Now, that being said, after interest rates come back down, bonds will be back in the boat they were in 10 years ago. And the whole part of the attractiveness of it will be replaced with you're not earning any interest and you're standing on the train tracks. But in the short term, though, you have a likely scenario that interest rates go down and you're getting 4 or 5% interest while you're waiting. Let's say you have a 10-year bond and over the next 2 years, interest rates go back to zero or close to zero. In a treasury bond, you might get 15 or 20% appreciation in addition to your 4% in interest. That's obviously pretty attractive, especially when it's not a particularly risky or volatile asset. That's a pretty good thing.
So, Jake, if I'm hearing you correctly, timing is very important here. Are you saying that we should get bonds while the getting's good?
I think that we should be considering all the asset classes out there, but the ones that are interest rate sensitive are the ones that we should definitely be reviewing if we're looking to buy bonds or CDs or annuities or life insurance, those types of things. We definitely want to be taking a good hard look at it because your days are probably numbered of those being attractive. And so they're pretty good right now, but as interest rates come down, that becomes less and less attractive. Really what we need is an overall plan in the portfolio to take advantage of the fact that bonds are high and are likely to appreciate in the future. But really, you need a plan that really serves all your needs and all your goals. It's not just, this product's good or this product's good. All I'm saying is that bonds have been awful for a long time, and they're really not very awful right now. And so they can be a good tool to help mitigate risk, but also to help produce income and really diversify your portfolio.
Well, we talked about these interest rate cuts coming before the end of the year, and as you said, in the coming year, they could go down even more. So to me, it sounds like the future of bonds, at least beyond 2025, right now is not as rosy. Am I hearing that correctly?
So I think bonds actually are very attractive right now. I would actually question after 2025 whether they will be attractive looking forward after that. Maybe that's what you meant. I didn't mean to.
Exactly.
If I didn't quite understand you there, but yeah, I think between now and the end of 25, maybe even into 26, it'll probably look pretty good. But basically, once interest rates come back down all the way, we're going to want to be looking for the exit there and find something else to invest in because we don't want to get 2% interest and be risking getting devalued 20%, right? We want the opposite. We want to make 4%, 5%, and then have appreciation on top of it. And so everything runs its course. Everything moves in cycles. And so, we want to pay attention to those cycles and make sure that, as things are good, we are leaning in. And as things have run their course, we replace those with things that are, their time has come.
Okay, so it sounds like when you get into something, you usually want to have an exit strategy, but it sounds right now like time is favorable, at least for bonds, treasury, corporate, and municipal bonds. Again, if our listeners have questions about bonds or any other facet of their retirement plan, and they're looking for an honest conversation, somebody with a straight talk and honest answers, as we say, we're offering it for you right now by calling this number, 417-889-7233. That will put you in touch with Floyd Financial Group. Again, no cost, no obligation, no judgment for a casual conversation between you and Jake or you and Jake and Randy about your retirement journey. Again, no questions off limits. Maybe you want to talk about Social Security optimization. Maybe you've got a 401k, you've got a lump of money, you don't know what to do with it just yet. You want to create a retirement income that you can't outlive. Again, no questions off limits. 417-889-7233. It's not going to cost you a dime. So make that call this weekend. You can also find out more about us online at FloydFinancialGroup.com. It's FloydFinancialGroup.com. Jake, let's take our final break. When we come back here on Show Me the Money, we're going to be talking about some common retirement fears and how to overcome them when our program continues here on 104.1 FM KSGF, where Springfield comes to talk.
People of the Ozarks, step away from the fishing pole and prepare to be shown the money, because we're back with more straight talk and honest answers with Jake Floyd and Jeff Shea.
Welcome back to Show Me the Money. I'm Jake Floyd, and in this last segment, we're going to be talking about common retirement fears and how to overcome them.
And Jake, as retirement approaches, I think key concerns for a lot of Americans include inflation, life expectancy, and stock market risk. Retirees should acknowledge those challenges while taking steps to minimize them. So I want to talk about these common retirement financial fears and how to overcome them. The first one here is going to be running out of money. I think that probably is the biggest financial fear that most people have.
It's definitely the one they should be the most concerned about, right? Because a lot of the other concerns that they have are really revolve around this one. If people are worried about healthcare costs, which we'll talk about in a minute, if they're worried about the stock market, if they're worried about inflation, all those things are really ultimately about running out of money, outliving your assets, right? Mm-hmm. And so I think that it is a very real concern. However, with proper planning and a track to run on, you can be 99+% certain that you're not going to run out of money. And so, that's the main thing that we do here, is really help develop income plans for people in retirement, how to turn a 401k, 403b, 457, TSP, whatever it may be that you have for your retirement account, how to turn that into a monthly income so that you can, live throughout your days, and how to not tie all that money up so that you can have some flexibility, but, strike a balance between growth, safety, and liquidity, right? You need to have all those things in a good plan. And so just really understanding the balance, understanding what's important to you, and having a plan to make sure you don't run out of money.
And Jake, would you say that in this plan includes something very important, lifestyle choices? I mean, we can have different lifestyles that will affect how far our money will go.
Sure, and that's something that we'll talk about. Some people have more than enough money saved to accomplish what they want to accomplish, and if you do, then you can kind of do what you want. If you are limited in what you have accumulated for retirement, then we may have to talk about what's important to you, and here's how much money you can reasonably take without risking running out. And then we have a conversation about those things. I always remember 100% that this money is my client's money. It is not my money. I do not tell people, yes, you can do this. No, you can't do this. It's more, let me help you understand the implications of what you're doing, what it's going to do to you tax-wise, what it's going to do to your balance over time, right? We like to start out taking a little bit less so we have enough room to adjust for inflation in the future. If we start taking maximum income right away, then we have a hard time squeezing more out of it later. That being said, I have people that come to me and they say, hey, I really want to front load my money to where the next 10 years I want to spend half my money.
Right.
And I want to really accelerate some of that income so I can do what I want while my health allows it to. And so I think that's a good thing to do. If that's important to you, that's something we can talk about. But we just need to understand the implications of that. Later, we're going to have to cut back, because you just can't spend a huge amount of money off of your stuff forever. And so really understanding those numbers and crunching those numbers is one of our primary functions here.
So lifestyle planning, that is the building block, I think, of almost any financial plan. We've got to understand who you are, where you want to go, what your lifestyle is, and then make a plan around that. And if your lifestyle is too extravagant, we'll need to cut back on that. But certainly we're going to do everything within our power to make sure that you never run out of money. Next common retirement financial fear is going to be skyrocketing inflation. Inflation was out of control, but where are we right now, and how do we build a plan to counteract inflation?
Yeah, so inflation, is really on its way down at this point. I think that one way or another, inflation is going to come down in the short term, but inflation can always rear its head back up later. I think the next 3 years, we probably don't need to worry too much about it, but if the government continues reckless spending, which it almost certainly will, inflation is always going to be hanging out there to bite us. And so making sure that we understand how much money you need in retirement, understanding how much money you've saved. Again, this is kind of like the first one. If we want to make sure that we have room to live on more and more money as inflation goes up, then we need to make sure we leave a little bit of room and don't take the maximum possible amount starting day one so that we can have room to increase things. As asset prices increase, a lot of times we'll be able to give raises along the way. We can plan out to take a little bit less and then make scheduled increases to your income if you want to. There's a lot of ways to tackle it. It kind of just depends on if you're 65 and you're retiring now. When you're 95, you probably will not need to have as much discretionary spending because your health will not allow for it. And so I'm not as worried about trying to account for 5% inflation forever as a lot of people are, is just because there's a natural happening of, you spend a little bit less as time goes on because you're not out traveling the world when you're 100.
Well, inflation was about 2.1% for the longest time. Of course, it went way, way up. Right now, it's a little sub 3, I think. At least that's what we're being told. But still, inflation, very important thing to consider when putting together a retirement plan. Next fear is going to be high healthcare costs. And Jake, as we age, healthcare costs often increase. How do we handle that?
Yeah, healthcare cost is in the stratosphere right now, especially when it comes to long-term care.
All right.
Long-term care is, even here in the last bastion of sanity, skilled nursing facilities, $8,000 a month or more, which is just pretty crazy, especially considering 15 years ago, it was $3,500, $4,000. Assisted living facilities are up a lot. They're double and triple what they were 15 years ago. And so understanding how you're going to pay for those costs is an important thing to consider. Now, if you're in an assisted living facility, guess what you're not doing? You're not out buying a boat, traveling in an RV, going to Europe, all those types of things. And so some of it, depending on your income situation, can be absorbed. But in a full-blown nursing facility, skilled care, you're going to be spending a lot of money. And so understanding what asset you're going to use to help pay for that, or taking action ahead of time in order to fend that off using some kind of long-term care policy or an asset-based long-term care annuity or life policy, or if you have a lot of non-qualified assets, which is non-IRA money, there's certain types of trusts that can give you some protection if you plan ahead. There's a lot of things to consider here, but healthcare is definitely the biggest cost of your retirement for most people.
Yeah, and I know Randy used to do a seminar called 4 Ways to Pay for Long-Term Care, and long-term care insurance was towards the bottom of the list there. So healthcare costs, long-term care, that's a big fear. Next one on the list is going to be a stock market crash. Is the way to avoid a stock market crash just to have no money in the stock market, or should you always have a little in the stock market because of the growth potential?
Yeah, so that's a little bit of a difficult question to answer in a short period of time. But what I would say is, markets come and go. But the United States stock market is the greatest wealth creation engine in the history of our country. And avoiding it entirely historically will only cost you money. What a good thing to do is figure out ways with a floor under your money to take advantage of the stock market going up without actually having all your money in the stock market. Now, a lot of people, it's appropriate to have some money in the stock market, but for very few people, I would not recommend either having all of it in the market or none of it in the market. I think that those are too extreme. I think we need balance. And again, we want to balance both, the 3 things I mentioned earlier, which is growth. Everybody needs growth, right? That's why you invest the money. Safety. Everybody has a little bit different degree of safety that they need based on their risk tolerance, based on their age, based on their income needs. And then you need liquidity. You got to be able to get to that money either on a monthly basis for income or for emergencies and those types of things. And so understanding those needs really sets the table for what is appropriate asset class-wise. But simply ignoring the stock market, at least historically, has cost you a lot of money.
Jake, another big financial fear that people have going into retirement is taking Social Security at the wrong time. Some Americans do take it as early as possible, age 62, but really that could be a costly mistake.
Well, it kind of depends on your situation. So I would say that Social Security, a lot of people make it more difficult than it has to be. However, it is a very important decision. Mm-hmm. If you are done working and you're for sure retired, I think there's a case to be made for turning on Social Security early. However, there's more than just that factor to consider. There's a lot of things to consider. Is your spouse still working? What tax bracket you're in? There's a lot of things to consider. But if you even just take Social Security and you invest that money, those payments that you'd get between the time you're 62 and 67, let's say at full retirement age, add up to a lot of money, and just to break even, you got to be 81, 82 years old just to get even from missing those payments, even at the higher income level. And so it's wrong to just categorically say, turn it on at 62 or don't turn it on at 62, right?
Right.
But again, as part of the plan, it can make sense to turn on Social Security at 62. It really just is going to depend on, the rest of your income sources, what your spouse is doing, if you have a spouse, and what your spending needs are going to be, and we also have to be mindful of the fact that Social Security could get reduced at some point. Not saying it for sure is, not saying it's going away, just saying that it will need to be reworked at some point so that people can continue to receive it, and how they cut it and who they cut it on could affect that decision making as well.
And Jake, another big financial fear that people have going into retirement is financial mismanagement. Not as much on their part, but if they do use a financial advisor, they're worried that the financial advisor may not do the right thing. And I think that's one of the first things that you bring up when you have a meeting with someone, isn't it?
Having a fiduciary managing your money, meaning they have a legal obligation to act in your best interest, is important. A fiduciary is someone that you have to be able to trust, and because they have a legal obligation to act in your best interest, there's consequences if they don't, versus if you have a traditional broker and he's selling you investments at a commission, then it doesn't really matter whether he has your best interest at heart, because all he has to do is make sure it's suitable for you. Now, that used to be harder to find than it is today, a fiduciary. A lot of people are fiduciaries now. But having somebody who has some experience in the market too is very important. It's kind of like if you have you need a surgery, right? And you go in and it's complicated surgery, and you say, "Well, how many of these have you done before?" And he's like, "Well, I did my first one last week." Well, how'd it go? Not so good. You don't want the guy learning on you.
Sure.
Because people make mistakes. People have to learn the hard way, some lessons, right? How many people listening know that some lessons are best learned the hard way, right? And then you don't forget because it hurts. The problem is you don't want somebody doing that with your life savings, learning the hard way, right? You want somebody who's already done all that a long time ago. I've been here 18 years now. I am 39, so I'm going to be here a while. That's one of the things that's nice about Floyd Financial Group is you get the experience, of Randy and myself, but also being 39, I'm not looking for the exit. I'm not looking to retire tomorrow. And so I'm going to be here with you through retirement to answer questions and help massage income plans in and all that kind of thing. Versus an advisor that's now 65, you're almost certainly going to have a different advisor in the next 3 or 4 years.
And I'll take the last one, Jake. It has to do with debt. Debt drains anyone's financial resources, but with less ability to generate the income in retirement, it can pose an additional risk. So if you do have debt, particularly high-interest credit card debt, personal loans, even a car loan, that sort of thing, try to pay that debt down. I think a mortgage sometimes can be considered good debt. If you're interested in talking with Jake or Randy at Floyd Financial Group about your fears going into retirement, once again, we welcome that conversation. It's just a casual talk between you, Jake, and or Randy, and you can schedule your appointment by calling 417-889-7233. It's 417-889-7233. Phone lines are open right now. You can find out more about us online at FloydFinancialGroup.com. Well, Jake, we're out of time for this week. I want to thank you for your time, but as always, most importantly, I want to thank the finest listeners in the world, ours right here in the last bastion of sanity. So for Jake Floyd, I'm Jeff Shade. Have a great weekend. Talk to you again next week with another edition of Show Me the Money right here on 104.1 FM KSGF, where Springfield comes to talk.
The information provided in the preceding program is for educational purposes only and are not intended as investment advice for any individual or entity. All information contained herein believed to be from reliable sources. However, we make no representations as to its completeness or accuracy. The opinions expressed are subject to change without notice and do not constitute financial, legal, or tax advice. Please consult your financial professional before executing any financial strategy. Financial planning offered through Floyd Financial Group, LLC, an investment advisor registered in the state of Missouri.